All right, my friends, Monday is here, and I'll tell you what, the pre-market's looking a little bit messy. If you watched my video from yesterday, made it before those futures came out, but man, they're doing exactly what I expected them to do so far. We have a big week this week. Not only do we have tons of manufacturing data, but we also have jobs data coming out. And April 2nd, the Trump termed Liberation Day, when we find out more about those tariffs, which should be late morning to early afternoon, sometime in there on April the 2nd is when we find out more about that. I'm going to talk in this video just a little bit more, just very concentrated in this case, about what could play out based on what we hear from that day and then what to expect after that. And, you know, this is going to be a little bit of a branching scenario, if you will, because if I knew exactly what was going to happen, I'd be the richest man on the planet. Watch out, Elon Musk. I'm coming for you. So I'm going to give that commentary, but I also want to talk a little bit about Nvidia in this video as well, because I think that Nvidia is looking very interesting, and I think it's looking very much worth our time to give another consideration, given the innovations they have coming up and their positioning in the AI space and the current sentiment surrounding AI as well, which, by the way, if you guys want to see more of my technicals, see more of my commentary, talk with me, other panel experts over at our Discord, you can find that link down in the description. Sign up using the code word CASH when you do. It's going to save you up 50% on your first month. All right, guys, let's get over into the data and into the charts on this one. So the first thing that I'm going to put up for you is trading economics, looking to see what we have. So we have Chicago PMI coming up, probably still going to be down a contraction. Right now, consensus is still below 50, 45.4. We'll see. Forecast from trading economics is 43. So we'll see if that comes in lower than expected. The big catalyst, though, kicks off on Tuesday, April 1st. No joke, though, when we look at this, no April Fool's Day. ISM manufacturing PMI that's been flirting with 50. We'll see if it comes in. If it comes in lower than expected, a little bit more downward pressure on the markets. Higher than expected, a little bit of upward pressure. Jolts is going to really grab attention, though. We want to watch for that number. Will it come in around the mid-sevens for the Jolts number that we get, 7.63 for job openings and labor turnover survey? Or is it going to come in soft for us? We're going to have to watch and see what we're looking for. I should say what the market is looking for right now is either confirming more that we're in a recessionary state, in which case we should sell off more from where we're at right now, or are we going to see refuting evidence for that that's going to take some of that downward pressure off. In the meantime, I don't think yet that we're in a state of upward pressure yet, unless we would get some really astounding numbers coming out of this, and I don't think that that happens prior to April 2nd, prior to Trump coming out and talking for us. So let's move on from there into April 2nd itself. For this one, we have a ton of information coming out. ADP employment change being one of those. We're going to watch for that. Factory order numbers also coming out for us. And then Thursday is where we get ISM data, ISM services, to see where we're at with that. A little bit to wet the whistle on this early Monday morning here. So looks like someone has a case of the Mondays. Not really. I enjoy every day. There's no sense writing off 1/7 of my life just because it's Monday. Besides that, the market's open. I kind of get excited for Mondays. So let's move on from there into non-farm payrolls. Non-farm payrolls coming up on consensus 128,000 jobs versus a previous month of 151,000. So we're looking for that number. Is it going to come in soft? The trading economics forecast says they expect it to be soft. Unemployment rate coming in, let me see if I can zoom in on this one for you here. Unemployment rate, 4.1% last month, consensus of 4.2% coming up. And the thing is about the unemployment rate, let's see if I can bring it up on here for you. You can see 4.2, 4.2, dropped a little bit to 4.1, back up to 4.2. And if we go out to the 3-year, so we can see a little bit more on this, there you go. These peaks, the fact that we've withdrawn from those peaks has been a good thing for the markets. It was some of the pressure off the markets. Overtaking 4.2, moving up to 4.3. That's when we see 4.3 or higher. That's going to be significant downward pressure for the markets. We want to keep that in mind as well. So overtaking those peaks, putting in a higher high, if you will, for what we see for the unemployment rate, that's absolutely something to watch out for. So in terms of the employment data that we have, the services data that are coming out, what we're looking for is there further contraction evidence through the numbers that we see for manufacturing. Are they coming in soft? Because if so, that can also impact the job numbers that we see. Maybe not necessarily directly, but it could be something that as we look down the road, we start to get forecasts of softer job numbers, and that would be confirmatory evidence towards recession. And man, I don't want to see it. I'll tell you what, I'm still at my job. I'm a math teacher. I'm still pretty close to low, man, on the totem pole for that, even after a decade of being there. So any further contraction that there would be, even at the governmental level, which because I'm a publicly paid employee, that's something that'd still be pressure on me for that one. So guys, let me pop the next thing, trading economics, up here for you. We'll talk about some of the numbers that we see here. So let me go out to the daily chart for SPY, and you can see, pardon me, you can see that we're still selling down below where we were at in the pre-market hours, down below the 38.2 from the most recent Fibonacci extension that we have. We'll see where we open. Are we going to put in a lower low? If so, that gives us further room to the downside. If instead we find reason to bounce here, then we could head back up. So this isn't meant to sound as doom and gloom. I said that I would give an outlook for where we're at right now. And honestly, some of that downward pressure, that fear of the unknown, once it is known on April the 2nd, maybe it's not as bad as we expect. Maybe it's exactly what we expect. If that's the case, we can see the release of that downward pressure on the markets. And then we're contending once again. Let me take down the technicals. We're contending once again with the 20-day and the 200-day if we get that release of pressure. If instead we get a big old fear bomb dropped on us on April the 2nd, with the tariffs being even broader than we expect, more intense than we expect, or if the fallout from April 2nd ends up being pretty darn significant, maybe it's a rise in geopolitical tensions like what we saw most recently with the whole Trump and Putin saga playing out, trying to cool things down there. Man, it's not cooled down right now. The market doesn't like that kind of stuff. So the market's selling down. We want to see that cooling effect. If we do see a cooling effect with geopolitical tensions, if we find out that the tariffs not as broad as expected, maybe not as steep as expected, then maybe we start to see some of that levity come back. We start to see that pressure release off the markets. And once again, watch the moving averages then, because that's what we're contending with. I apologize for my voice, by the way. Been fighting something since last week. Seems to be affecting me mostly today. All right, let's roll into the Qs. Much of what we see on the Qs is also what we see for SPY. There we go. We'll move that up. So we, as of the pre-market, might be putting in a lower low. Matter of fact, Nvidia, which I'm going to talk about, is probably a bit of that reason for that one. And I got to say, is the story over for AI? No. For Nvidia? No. Is that story looking a little bit gloomy right now? The story is absolutely looking a little bit gloomy. I'll give more light on that in just a little bit. So right now we have the Qs, which is the NASDAQ 100 ETF, being dragged a little bit down, probably being a little bit more settling from the AI plays that we have out there. I still think Nvidia is the top dog, maybe even putting in that next 2x run the next time that we see it running. Like I said, I'll talk about that soon. We're down below the 38.2 on this one as well. The 50% Fibonacci extension value on here is at 546. So we want to be watching, 456. So we want to be watching that value for what exactly comes out. And as I put in yesterday in my video, we can see that chop as we look to the left, maybe even down to the 618. If things get really gloomy from right now, we sell down further. Watch for that support to come in right around just below 450. So 447. By the way, that 100% extension move from this previous move that we have happens all the way down at 419. That would be significant pain. At this point in time, that's what I'm labeling as max pain in the market without knowing more of what we have coming our way. So if we do see that pain, I think 419 is that nice max pain level where we start to absolutely be able to rip from there back up. And even potentially, depending on what sort of environment we're in, maybe we start to see talk of higher highs coming in. But that starts to get really, really fringe, if you will, at this point in time. Near term, though, watch out for that pullback to maybe down below 450 if what we see for April 2nd ends up not being so great for us. And we will definitely want to listen to what's happening around the world as a result for that. And that can help give us a feel for sentiment in the markets. And that can tell us a little bit more about direction to expect. So again, downward pressure could be released for that buy the news, if you will, on April the 2nd. There's also a chance that maybe the news is worse than expected. Maybe we get surprised in that way to the downside. That pressure only heightens, only intensifies. Then we got to watch for that as well to the downside. IWM, this is one of those outperforming plays that I think we could absolutely see. Let me take off this Fibonacci that I have on here for you right now. Let's also go down to the daily chart to look a little bit more in terms of the same way for what we looked at for SPY and QQQ. Down below the 23.6. The 38.2 is around 196, and we have a lot of chop right around that 200 number, so we want to be watchful for that. The one, by the way, max pain level on here is around 175 for right now, based on the last move that we've seen extended on that. Bitcoin is fighting to stay up above 81.5, 81.7, I guess is that number. As we start to see these candles start to slow down here, looking at that extension to the downside, we can see that this could take us all the way down to about 70,000, which puts us right at about the top of this sideways trade that we had last time. So for Bitcoin, don't know that we're down and out. Same thing for the markets that we have right now. If the market is going risk off, Bitcoin probably softens a little bit more. In terms of that, let me jump over to TLT. I'll take down the Bollinger Bands on this one. We're looking at the daily chart right now. Let's actually go out to the monthly chart, because the momentum, even though it's down below 50, and I talked about this in yesterday's video, it is climbing though. Watch for that cross. If we do get to that point that the market really does go full on risk off, this is a place where we can see that outperformance to the upside, and the monthly chart crossing over 50 is no joke in terms of bullish momentum. So if we go down to the weekly chart on that, what does that look like? Well, we have still a steady climb between the peaks and the valleys that we see. We haven't been able to sustain up above 50 so far, but man, we're right near it again. So also, in terms of the Bollinger Bands that we see, the narrowing that we get on the Bollinger Bands, this is getting really tight, and that could lead to a rapid expansion, if you will, of the Bollinger Bands. We don't know if it's going to be to the upside or the downside. We want to watch that 20-day in between. Well, this is the 20-week for this one, the 20-period moving average that we have, to see where that goes. On the monthly chart, you can really see that narrowing take place, and it's a more significant the narrowing. Last time that we saw it like this was going back to July of 2018. So we'll see which way this breaks for us. Right now, we're down below the 20-month. Wait and see if we get that cross up above. So that would be risk off, and the fact that the U.S. would be able to survive, if you will, a move to the upside with their treasuries, a demand for those U.S. treasuries. If instead it's maybe that the U.S. Goes into bad shape, if you will, and something that would cause us to reject off of that would be that maybe that fear comes up that the U.S. is going to default on its debts, in which case that would push most likely TLT or something like that down to the bottom side. Right now, I don't anticipate that to happen. I think sooner a break to the upside from TLT is what we can expect, especially if we can get on top of that 20-month moving average, which could be coming for us on a daily chart basis. On a daily chart basis right now, up a little bit in the pre-market, as we have a little bit more fear in the markets this week because of all the data that we have coming out and the Trump-termed Liberation Day also. Now for Nvidia having a rough go of things. And so for Nvidia, going back to the carry trade day, we bottomed out at $90 per share, and we ripped up $60 from there up to the peak that we had. As a matter of fact, we did it twice following that. I think that we have an even bigger rip coming for Nvidia sometime down the road. So watch the dust settle for AI. And the thing is, for Nvidia and what we have happening. So I was thinking about this in terms of the calculators that we use, because right now I have 8th graders and they get handed a graphing calculator for the first time, and they treat it like an arithmetic calculator. They add, they subtract, they multiply, they divide. So the things that you learn in elementary school. So there's this really powerful device with Texas Instruments calculators. It's like 1980s technology, but for them, it does so much more than what they use it for. And I think that's where we're at with AI right now, with like large language models. Yeah, here's the cool application. Check out what it can do. But I think that we're waiting for people to catch up to what exactly that hardware is capable of and the machinery is capable of, and we're not even really pushing the limitations of what it's capable of. I think that we're pushing the limitations of what it's capable of in a very narrow dimension right now. I think that broad-based use still has yet to hit us, that we're still waiting for that next wave of applications to come through. And Jensen talking about anything quantum right now is preparation, saying that right now it looks like quantum's the only thing that can be that next paradigm shift from what we're doing. And Nvidia is one of the only companies, in my opinion, that has the money to really innovate from where they're at right now. Now, mind you, there's some other companies that are out there, but in terms of AI chip design, or the hardware design that it would be, Nvidia has its eyes laser focused on that right now. So the big innovations that we would have would come through using power more efficiently, for example, and allowing the cooling to be more effective and really pushing out the next throughput that you will. And we see that we have Rubin coming up, we have Feynman after that, and lots of time for innovation between now and then. And right now we're at the very beginning of AI informing AI. And like I said, this is a very beginner thing. This is those kids realizing that graphing calculator has scientific calculator abilities and just barely scratching the surface of that. And then it can also do even more from that. They can start to put pictures up on the screen for you for what can take place. So I think that that's sort of where we're at right now with the AI stuff, with large language models being one of the biggest things that people talk about, but the researchers in the background are doing just so much more, and it just hasn't hit that commercial level yet. And as we start to really get to that commercialized level for those fringe uses, I think that explosion is yet to happen on us, and I think it's going to cause a second wave of Nvidia chip demand. So that's something that I'm watching for, something that keeps me bullish on Nvidia. And right now, while we have this doubt coming in for the AI space that, oh, maybe it's overdone, maybe it was just a bubble, maybe it's just overblown, while we're in that FUD period, if you will, for Nvidia, I think we might see a further sell down. I'm hoping that we at least see a big enough sell down to put us at least 2x back up to the original peak, and then we get an even larger outperformance up to a brand new peak beyond that, which I forecasted for this, for my trajectories for this, based on the growth that they could potentially put out, up to about $170 per share, at least in the somewhat near term. We'll call it in the medium term from where we're at right now. So in the next 2 to 3 years, we could see that price tag come out. So let's put up the chart here, talk about where we've gone. So you guys can see the last time that we had a big mess come up for us back in early March 2024. We peaked out around 97 on a split adjusted basis and bottomed out around 75. So if things get dark and gloomy, like on August the 5th with the carry trade disaster that we had happen, that brought us right down to the top of this. If we're in that same sort of situation right now with Nvidia, maybe we do happen to sell back down to those levels. We're at that $75 to $90 range. If we do, to me, that's a boat loading opportunity. And I can only speak for myself, but I can tell you that I'm a much heavier buyer down at those prices because we've seen that price performance move up, and I believe that we're going to get there again. Right now, I think that the market is pushing down and undercutting Nvidia prematurely, if you will, looking for better deals elsewhere, taking this opportunity to cast doubt on the AI space when we know that there's a much bigger future waiting for it. So for Nvidia, let me put up just these trend extension lines, if you will. When we start to use them together over longer time periods, let me just show you on the daily chart what this looks like, and let me stretch this out right now. Right now, we're down below one of the 618 levels, but when you start to use these in conjunction with one another, that's when you can really start to see those uses come in, that we have this support area right down here, and that happens to be at about 106 down to about 103, and in the pre-market hours, we find ourselves down near a support area. And then down below that, when do we get another clustering? Well, we get another clustering down from about 93 down to about, well, surprisingly, $90 per share. When do we start to see some of the other values come in and we start to see more clusters? Well, one of those areas that we start to see those clusters, and now they start to get spread out. This one's not bad, from 78 down to about 70, and then we really start to get into this into the thick of things down below that. And so if I move this a little bit more, you can start to see all these green lines show up on the screen, that we just start to have a uniform density. So this would be that, man, we would be at so much max pain. I don't even know how to say this. Like, I would say that Nvidia would sound just, on death's door, according to the market, to see us down around that 63 which is where we see this. I don't think that we get that low. Honestly, I think $90 would be where we start to see some of that fear come in. And if the market would have to be in really rough shape for this. I don't want to make it sound, once again, not doom and gloomy. This is a hope story that even from where they're at right now, I still think that there's at least a 60% upside waiting for us. I doubt, how does that sound bearish? I really don't think that it does. In the near term, though, I think that we could have some more buying opportunities coming our way, especially if we sell down a little bit lower from where we're at right now. So guys, down in the description, you're going to find a link for the Discord, 50% off your first month when you use the code word CASH. And if you guys want to learn to do technical analysis like this, learn how to trade technicals using the bread recipe, learn about how to use options to really fill out that alpha in your portfolio, there's a link down in the description for Stockmo Academy. You can sign up using the code word Dr. DOCTOR. So it's CASH, CASH, for the Discord itself, For the courses, use the code word doctor, and either one of those, I mean, they both have great value. Might as well pick them up while you're at it. They support this channel, and you're also supporting yourself in your journey towards financial freedom. And you not only have me over there talking about what I see happening in the markets, but then you have other panel experts over there as well. It's stocks, crypto, you name it, it's all there for you, including live trading. There's a bread bot over there that can help you with the bread recipe. You also have AI tools, and then you also have advanced charting tools, all available to you in the Discord when you sign up. Like I said, use that earner tier, use the code word cash. And if you guys, like I said, you want to know more about it, those courses, I have 17 years in education. I got my doctorate in education, and I also have my master's degree in education for instructional technology, educational technology, and all of that is how do you use technology to leverage the best learning methods possible. And I can tell you what, I vetted these courses myself. They're incredible. So you guys are welcome to tell me what you think about the market. What do you think about what's coming for us in the markets for April 2nd? Is that going to be the Max Payne day that we start buying the news instead? Or is it that day that we start to see just the beginning of that fear, a new wave of fear into the markets roll in, and we see a further flight to safety? Like I said, let me know down in the comments what you're seeing. For me, I think that we're going to go either way. I think that there's a very, very good chance that we buy the news on this one. If it sounds worse than we thought and we start to put in a new lower low, maybe we see a little bit further selling, a little bit more pain as we start to answer those questions. When we start to see peak fear roll around, that's where those huge opportunities come in. I can tell you that one. And then for Nvidia, are you long-term on Nvidia? Are you bullish on Nvidia? Do you see the same thing that I see, that we're at the first wave of AI, kind of like, cool, this does neat things? Or are we at that commercial stage right now? Or we're seeing that commercial stage coming down the road where there's that huge opportunity just chomping at the bit for Nvidia. And I will say, just as a side note, Intel, I think, has brighter days coming its way. I don't think that it's the top dog like Nvidia is, but I think that Intel is going to take that pivot sometime soon. Like I said, let me know down in the comments. Subscribe so you can see my other videos come out. Join us at the Discord. And then also don't forget about those coursework, code word cash, code word doctor. It's all down there for you. You can go ahead and read about it yourself. Can't wait to see you over there. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.